What's up, Anthony? How's it going?
Hey man, what's up?
Just staring down like a bunch of dragons and demons and a big computer box right next to you. Your room looks fantastic, man.
Yeah, thank you, thank you. It's the dream room basically that I've had since I was a teenager. Always wanted a room like this, so made it happen.
And your
Yes,
ideals
like
and your goals just hadn't changed since you were there?
for this room, no, not really. I always wanted like a nice kind of like room with my computer in it, with all my worldly possessions around me and things like that. Yeah, it hasn't changed since then. Which is funny because even my friend said to me, "It's like, yeah, you were talking about this like 15 years ago, man, and like you finally did it." And I'm like, yeah. It's weird how it didn't really change.
Mhm.
So yeah, no, it's cool. But yeah, man. Crazy since we last did this. I think 2 months ago. A
Yeah.
lot has happened in the ecosystem since then.
Yeah, I similarly like you always had a goal of putting my name on top of big sports stadiums, and so that was the big piece of news that came out today out of Bankless is we now have a sports stadium named after us. I don't know if you saw that.
Yeah, I saw that. Yeah. And it's not an April Fool's joke because it's April 2nd for me. So I fully believe you.
Oh, I guess then the gig is up, huh? Gig's up over in
Yeah.
Australia.
Yeah, I have to experience April Fool's twice, like 48 hours of just shitty jokes. And oh man, it's terrible. I can't use the internet for like 2 days. It's so bad.
Okay, so I know we both have read Vitalik's article, so I want to get your thoughts on that. Vitalik wrote an article called "Defending Bitcoin Maximalism," and this is the second blog post that he's released on April 1st. I think it was like 3 years ago. He submitted an EIP, I think, for imposing a hard cap on Ethereum, and it was one of those things where like no one actually has any total like complete assurances that he's not being at least a little bit serious about it. And so like when you read, but I remember reading the hard cap proposal and then also reading this one, it felt like reading something that reflects a little bit of how you interpret it as you read it, right? It's a joke and it's an April Fool's joke, but like it's really a joke that is meant to be interpreted by the interpreter. What were your thoughts on his piece?
I mean, I thought he basically perfectly stillmanned the Bitcoin maximalist argument better than a Bitcoin maximalist could. Like he explained it so well.
By far.
And you're right about the interpretation thing, where I was reading it and I was like, you know what? I actually agree with a lot of this. Just not with Bitcoin, with Ethereum, right? Like, because I'm coming at it from an Ethereum angle. And the funny thing is, though, the more I thought about it, more I was like, well, I pretty much have always held these beliefs. I just think that Bitcoin is the wrong implementation of them. Like personally, I think Ethereum is the better implementation. But I mean, yeah, Vitalik does this where he'll post something and he'll be like, yeah, it's kind of like it's April Fool's, but like I'm being serious, like a meta April Fool's joke. And the hard cap one was really funny because it basically, I think the goal for him is to get people to kind of like look within and think really deeply about this stuff and be like, oh, what if it isn't a joke? And like that gets people thinking more deeply about it. And then they're like, oh, no, that, this is actually the way it is. And that's how, I think that's when the Ethereum community at that point, not maybe decided not to have a hard cap, but really kind of like challenged our assumptions about it and was like, okay, yes, no, a hard cap for Ethereum is actually not a good idea given the Ethereum's kind of design and everything. And I think with the maximalist piece, he was trying to get us to basically see the other argument and see how it applies to Ethereum as well, and not to fall into the hardcore kind of parts that the Bitcoin maximalism community has fallen into.
Right. The things that I actually felt were actual jabs in his piece were the thing where I think it was like three instances of him joking about how the Bitcoin maxi take, being satirical here, is that like if you give up one concession, then clearly you're going to have to give up every single one. And like Vitalik is very much like in the mindset of you can compromise without having to compromise too much. We can find a Goldilocks zone, and that's not going to rot our values by giving up a little bit. Like we have the common sense and the ability to say we're going to compromise here, but then no more. And it's not a slippery slope. And so there was like three jokes in his Bitcoin maxi piece that were all about like, well, clearly we can't give up anything because if we give up anything, then we give up everything. And I think that was the time where it's like, okay, this is Vitalik just being like completely absurdist.
Yeah. And I've always thought about that as well, because Bitcoin maximalists love to make that argument, the slippery slope thing, where they're
Mm-hmm.
just like, you change one parameter, what's to stop someone else from changing the other? And the typical argument that gets brought up is scalability, right? Like, so, Bitcoin is the least scalable blockchain out there, or maybe Cardano is, I don't know, but Bitcoin definitely not very scalable at layer one.
Cardano's even a chain.
Yeah. But then, they didn't want to increase the block size and all that. They had the war over it. But then Ethereum comes along, and effectively Ethereum is more scalable at layer one, increase the block size a little bit, but then does a bunch of other things to increase scalability at layer one. And then people say, well, what's to stop something else from going even further than that? And then we have like the Solanas of the world, which have basically said, well, we're going to have everything in data centers, and it's going to be like super hard for anyone to run one of these kind of like nodes unless you've got a lot of money. And I get that slippery slope, but the thing is, they're applying it to different instances in that respect. It's like saying, well, Ethereum did this, what's to stop them from going even further? Well, what's to stop us is that we understand that there is a Goldilocks zone, as you said, and we want to get into that zone and don't go any further than that. But I think the Bitcoin maximalists think that as soon as you cross that, as soon as you kind of like make that concession, you're open to making all the concessions, and that's just not how life works in general. Like, it doesn't. And I think Vitalik actually got that point across pretty well, I believe.
Totally. What other April Fool's jokes have you seen out there that were worth talking about?
Dude,
Did you see
Cardano jokes?
We'll get to that in a second. Zero Hedge retweeted Vitalik's article, taking it completely seriously. Did you see that?
Yeah, yeah, I saw that. Yeah. I love that because of the fact that that's exactly what Vitalik wanted. He wanted to see like people share it as a serious thing, but then halfway through it be like, oh wait, maybe this is a joke. But yeah, no, the Cardano jokes everywhere, like everyone making Cardano. I even made one. I don't know if you watched the last episode of the Daily Gwei refill I did. The intro is a bit different. I'm not going to spoil it.
No, I missed it. I haven't watched it yet.
Yeah. So I made a joke too, but yeah, man, like Hazu actually put out a tweet where he said, today all the Bitcoiners are making Ethereum jokes and all the Ethereans are making Cardano jokes. he was so spot on as well. But that's just terrible. As I said, man, it's a terrible, terrible time for me, especially because of the fact that I have to experience it for so long. And, I saw someone else retweet themselves from years ago saying that April Fool's Day is the one day people take things, on the internet as a joke, when they should actually take things on the internet as a joke the other 364 days of the year. It's just, yeah.
It's a complete inversion of like, I think the last year, I think people just talked about, there was more chatter about April Fools in the crypto industry last year. People were talking about it like a couple days leading up to about, hey, like, in 2 days, this is the day we take off from Twitter. We just don't go on Twitter that day because it's just a mess. And like, it was a little bit more tame this year. I don't know why.
Yeah. I mean, it was. And I had a friend who I don't think experienced crypto Twitter on April Fools last year. And he's like, dude, like crypto Twitter takes April Fools so seriously. I'm like, dude, no, it's just the Americans, man. Like they bloody love April Fools. Like you guys actually, like it really is like something you guys absolutely love doing. I don't see any of the other kind of cultures and countries out there doing it to the extent that you guys do.
To be honest, I was never really much of an April Fool's Day person, but Ryan was all about it last year. And that's when our April Fool's joke last year was that we got acquired by Wells Fargo. And like, when he was gonna send out this email, and it was gonna be just like this classic April Fool's thing. It's like Bankless gets acquired by Wells Fargo, and in my mind, I was like, Ryan, like, no one's gonna believe this. This is ridiculous. Like, are you serious? Like, this is kind of a lame joke. And then he sent it out, and so many people believed it, and I was so shocked. I was like, oh my God, I had completely like misjudged. Like sometimes like people are just not reading critically. Like Bankless got acquired by Wells Fargo, and we lost like over 200 subscribers because people were like, "You guys are sellouts. I believed in you. I can't believe you would do this." It was ridiculous, bro.
What I find really funny is that it kind of shows how humans are inherently kind of like trusting from the like at face value. They like to trust and take things because they don't think they're going to be lied to by everyone. Right. And not to get all kind of like, grand about this, but this really does speak to a wider issue in society and the internet in general, where people believe things that they read on the internet without questioning them at all. And obviously the media plays a big part in things like that. And April Fool's Day was always a chance to kind of like see like how easily people are fooled. Basically.
No, you're totally right. I think like the conclusion I came to is that like, some people just forgot to check that it's April 1st, right? Like, and everyone, that's what everyone makes the comments. Like, I posted the news of Bankless putting the name on the stadium to my Instagram story, and like normies don't know how to gauge these things, right? And so like I got so many people saying, "Oh my God, congrats, that's so huge," and then they would follow up, "Oh, it's April 1st." Like, it's always the first reaction to like, oh, of course this would be like, yeah, but I guess that's normal, right? Like you can't go outside whenever you're like meet someone on the street. You're not like judging them. Say, are you about to lie to me in your next sentence? I guess it's more normal to assume that, but I guess it gets more and more dangerous in like places like Twitter, especially crypto Twitter and media and the internet.
Yeah, no, I think so. And again, there's a Goldilocks zone of trust and mistrust, right? Like, but I don't think many people do that these days, especially because they're bombarded with so much information. But I think, well, speaking of April, actually, I haven't asked you, are you going to ETH Amsterdam or going to be in Amsterdam?
Totally.
You are?
Absolutely.
Okay. I remember you saying you were kind of like on the fence, but that was a while ago.
Oh, no, I'm all in.
You're going.
I just haven't got my hotel yet. Got my plane ticket going Sunday to Sunday. Started signing up for some things, but I still need to like actually like schedule out my full itinerary. But it's going to be awesome, bro.
Oh,
like
dude,
some of the content and talks out there are going to be gigaprane frontier level stuff. I think it's going to be one of the best like bastions of knowledge on the planet this year.
Yeah, I think so. And the fact that it's like in Amsterdam, where it's a small city, there's like great scenery with all the canals and stuff like that. A lot of culture to bathe in, essentially. I'm super excited. I've never been to Amsterdam. The only European city I've been to is Berlin, and that was like awesome, right? And I know Amsterdam, Berlin, like they're same but different. Like I have a good friend that lives in Amsterdam, and you know we were kind of discussing that. But yeah, I'm just so excited, dude. Like for me, it's the first time I'll be traveling, you know, overseas since COVID, since February 2020, ETH Denver. And I went to another crypto conference the other week, Blockchain Week, and you guys had a panel on it. But, you know, and that was different. It wasn't like an ETH conference, but there were, you know, it was just good to get back into it. I know you've been doing the conference circuit a lot lately, but man, I think, Amsterdam is going to be one of the best this year for sure.
Yeah, I really, really think so. And I think the only other comparable things to what I think is coming with Amsterdam would be ETHCC that happened last February, and then probably ETH Denver as well. But like, I still kind of think that this is going to be in a league of its own, just kind of by the nature of the actual event, like the bottom-up immersion organization rather than the top-down curation. I think it's pretty cool and really compelling. And I don't know how people started organizing all this stuff, but like all of a sudden everyone was there talking about really complicated, really cool stuff. And it started just to be a really, really good chilling point. And it's the structure of it. Okay, so I think MCon would be the only thing else that I would compare it to. Even though it's very different, like DevConnect's being way bigger than MCon, way more publicized in Amsterdam. But MCon and DevConnect definitely have this whole like, there is no central organizational structure. People just have picked a date and a place and said like, all right, start making events, people, and people did it. And that's pretty cool. I think that's something that only the crypto industry has really done.
Yeah, no, exactly. I think, I mean, that's exactly what it is, right? Like it's a bottoms up thing where you had like, I mean, there's ETH Amsterdam, which is being run by ETH Global, but then like all these other events around it that have been just created by individuals, and they're kind of doing their own venue kind of stuff, getting their own venue, getting their own tickets set up and things like that. So yeah, I mean, I think the only issue I foresee with it is that the venues I think are quite small, and there won't be that many people able to go in there. But the thing is, as I said, Amsterdam's a small city. There's probably going to be crypto people everywhere, like, you know, around all the venues and things like that. So I'm pumped for it, man. I don't know if you can hear my dog barking, by the way. He's
a little bit,
barking.
but not too bad.
Yeah.
Not too bad.
he saw someone drive past, so he's barking. He's protecting me.
Oh,
because you know,
thank God
little Maltese Shih Tzu is gonna protect me. But
all right, we're 15 minutes into the stream. Do we start talking about the merge now?
Yeah, I mean, we can talk about like ETH, the price, and then we can send it to zero. Like,
okay, yeah, let's talk about the price. Let's talk about the price.
Yeah, price is good.
Yeah, dude, bounced like straight up off of like 3,200 back to 3,400.
It's at 3,500 almost now. It's
what the hell?
Right as we're doing this.
What the hell?
Yeah, right as we're doing this, it just started pumping.
No way.
Let's not curse it.
Oh wow, lovely.
No, you know what? Okay, on the topic of the merge, and I think and the price, and I think what's more interesting is that the ratio has been going up, right? The ETH
ratio's
BTC
been
ratio.
killing it, bro.
And the thing is, it's been killing it while everyone's been focused on this thing that Do Kwon from Terra is doing with this kind of like LFG Foundation buying Bitcoin, apparently buying $10 billion worth of BTC, and yet the ratio is going up. And I think there's obviously a big reason for that, and I actually think it's the merge. I think finally people are kind of cluing into it. Mainstream media is covering the merge now. They're actually saying the merge.
Bigly, yeah.
Yeah,
it's all over Bloomberg.
Exactly. And then I think that's drawing in more people to stake. And that's why we have a long validator queue again. The validator queue is at like 2 weeks or something last time I checked, right? And that means it takes 2 weeks from when you deposit your ETH into the deposit contract for your validator to be activated on the Beacon chain. And we have, over 10 million ETH staked. There's so much ETH coming in. Like I saw a Spencer Noon thread today where he said that a lot of the ETH is actually coming in via Lido, and he thinks that's due to a new money coming in, like instead of existing money, because the existing money would have already staked, would have already done it on their own or through other solutions like Rocket Pool. But this is actually net new money coming in because they're like, holy shit, like I can get 5% or 4 or 5% right now, and then post merge I can get potentially higher than that on my ETH as kind of like a risk-free yield. I mean, the risk is super low when you're staking, especially if you're staking on your own, it's still very low. And I think people are cluing into this and being like, holy shit, like, and then obviously the issue introduction that's coming with the merge and everything. So I don't know, man. Like I remember I said to you or a couple of people like a few weeks ago, I'm like, guys, I think the ratio is gonna like bottom here because the merge trade is on. Like it's on in a really big. Everyone's shilling the merge. Like even the people who don't like Ethereum is shilling the merge trade, right?
Right, totally, yeah. Luke Martin, the Profit Maxi podcast guy, he had a show on the merge, and like Bloomberg literally wrote 3 reports on the merge. I think it's interesting if we're assuming that these. I think Spencer Noon's thread indicated that it was like institutions and like funds that were coming in rather than individuals, making the assumption that people are going from having less or no ETH to having ETH and staking it, like skipping over the holding part and going to the staking part. And I guess upon hindsight and consideration, I think that makes sense because that's how it's being positioned in Bloomberg. They're like talking about it as the internet bond. Same with Arthur Hayes. That's how he talked about it. It's just like you got to include it as like the internet bond, right? And so people, I think, just even though like the capital appreciation, the amount of money you get is much more likely going to be from ETH number go up rather than yield go up. Still, the existence of the yield changes institutions' like perception onto what the asset is, right? And so it drives their connection straight to the bond market. Be like, okay, we can't have bonds anymore because of broken stuff over here. But then there's like this ETH thing with a yield rate, and it's like that. So maybe we can just plug that hole with Ether, even though it's a lot more volatile. Like I feel like that's a logical institutional frame of mind to take. I think
so, and I think so, and I think funny enough, Jen Spartan on Twitter has actually been talking a lot about this, and he has been talking about this for a while now. But basically, this notion of traditional finance coming in, seeing these kind of like products like ETH staking, and being like, wow, I can actually package that up and sell it to my customers and charge a nice chunky fee on it. And that's it. Like similar to what Grayscale has been doing with their funds, right? Where their funds are trash. Like GBTC and ETH are absolutely trash, right? They fleece retail. The smarter people do the arb trade. And
they don't intentionally fleece retail. I wouldn't say.
No. Okay. No, I meant like.
But yes, it's bad for retail. It's bad for retail
because they always buy at the premium because that the premium happens when the market gets hot and then they get kind of like destroyed with that. Right. So it's not a great product. Like an ETF obviously would be a lot better, but it's kind of similar to that where they just take a fee. It doesn't matter if it's up or down, the premium's positive or negative. They're still taking a fee from that, and that's exactly what TradFi is going to do with ETH staking. They're going to wrap it up into some normie boomer product, and they're going to sell it to their boomer clients, and then that's how a lot of the money is going to come into this ecosystem, I think, and that's how the wealth transfer is actually going to happen through these centralized intermediaries funneling their existing customer base into crypto through these centralized products, and that's totally fine. Like, I don't think that's an issue at all because I mean, look at the amount. Like, I mean, look at the active ETH supply right now that's trading. I think it's like 14% on centralized exchanges or something like that. And then obviously you have to count DEXs and stuff, but it's not very much of the supply. Then you have the burning. Then you have the massive issue introduction coming. like any kind of spike in demand is going to just absolutely moon ETH. And I think we're starting to see that right now, is that like ETH is so scarce. It's become such a scarce asset, and it's become such an in-demand asset, not just from people, but from the network itself burning the ETH. I mean, even when Gwei was 20 Gwei, post-merge, we would still be deflationary. That's that's how efficient the system is going to be post-merge. So I think that people have finally clued into that. And yeah, I mean, it's crazy. I mean, yeah, I'll actually get up an ETH chart here just to illustrate.
$3,499.99. We're almost there. This is Justin Drake's thesis. Oh, there it is. There's 3,500. Nice. Here, I got a button for that. Oh, it's mooning. Oh, look at that. 3,510. This is Justin Drake's thesis.
I was like, what's that?
Oh yeah, that's my soundboard. This is Justin Drake's thesis about like the whole, or not thesis, but the mental model of ETH, like frozen ETH and then vaporized ETH, where oh yeah, that's a good looking chart. So like vaporized ETH or like boiled ETH. Imagine ether is a bunch of water, right? It's like a bunch of water in a pot. It's liquidity, right? So we have 14% of our ether as like liquid ether on the secondary markets, right? And so that's like literally the liquid form of water, for example. And then staked ETH is frozen ether. And then boiled, like vaporized ether, boiled ether, steam ether is ether burned by EIP 1559. And then also ETH in DeFi counts as like frozen ether, right? Locked ether. And so a lot of ether is locked in either with staking or in DeFi. I don't know what percentage of all ether. And then you have like the ETH vaporizing rate, which is like substantial. And then you have 14, as you just said, 14% of ether is liquid on the secondary supply. So yields, the freezing force, the cooling force of ether, it's about to 3x as soon as we merge, because that's the yield is going to go up by 3x. So the incentive to freeze your ether and stake it is going to go up by 3x. And then the burn rate is going to stay the same, but the issuance, the new flows of water into the center liquid part is going to be cut by 90%. And so the vaporizing part is going to have much more of a substantial effect while there's more cooling. And so the liquidity, the 14% is going to go down to like, I don't know, a much lower number. And so what you're saying is that when like $100, when $100 comes in and buys ether now, it moves it somewhat, but in the future, it's going to move it proportionally a lot more. Like $100 will actually have an effect. Well, these are just making numbers up, but this is the metaphor.
No. I think so. And I think that's another reason why we're seeing the ratio gain as well, is that like, people come in, they're buying ETH instead of Bitcoin, and it doesn't take much to move the ether price due to that scarcity that you just kind of like outlined there. And I mean, yeah, look at this chart. This looks to me the same as over here, right? Like it's basically the same pattern. And I'm not a technical analysis dude, but like when I see momentum shifts like this, where like it definitely has just shifted bullish, like just based on the chart alone, not even just the sentiment, I just think to myself, like, holy shit, like this cycle has been unlike every other cycle.
It's trying to buck you off, bro.
It is though. But like if you go to like, I mean, hopefully I think this goes back. Well, this is the Coinbase chart. Yeah, you kind of like look at that. I mean, usually you'd see, in these cycles like this, right? And that's what you see with Bitcoin, like all the way straight down. But here, people thought that was going to happen around here. Like maybe I'll get a marker out. People thought that was going to happen here, right? They're like, oh, it's over. Like we blow off top. We went down 60% in a week. Like, I mean, I think what happened is we priced it in way too quickly. Like that was a crazy crash, right?
Right.
And then we had 1559 hype, right? And then that went live, and then we pumped, and then we came back down. Then we have the merge hype. So I think people need to realize that it's no longer the cycles of Bitcoin pumps, ETH pumps, alts pump, because it's now actually based on fundamentals rather than, I mean, there's a lot of speculation, but I think that fundamentals are being priced in more and more as time goes on, especially for larger assets like ETH. And that's what a lot of people are missing. And that's why they're getting shaken out. Like so many people are getting shaken out. Look at this crab here that we've had. Like so many people would have gotten shaken out in this being like, oh, I'll be going to dump another 50% from here, blah, blah, because it's actually logical to believe that, given the fact that it's happened in the past a lot of times, especially with Bitcoin. Right. So I think a lot of the Bitcoin traders or a lot of the OG traders are probably thinking, what the hell? Like, what's going on? The market's actually changed. This time actually is different, right?
Right. Yeah. At some point, it does actually become different, right? Because I had this critique going into this bull cycle in the last bear market. It's like, okay, people are just talking about the next bull run, the next bull cycle. Like, we'll just have the fourth crypto cycle. And I'm like, well, if everyone believes that, isn't that just mean it's not going to happen? Turns out not enough people believed that. And so it actually did happen. But what didn't happen is I would claim that sentiment was correct, but it was correct in the coming bear market, not the coming bull market, right? Where the bear market was just going to fake you out over and over and over again. For like 3 times now, basically, I'd say. Here we are.
Yeah, exactly. I mean, I don't know. This whole period has reminded me of 2019, basically from when we crashed here in May of 2021 to today. Because in 2019 we did the same thing. We literally we crabbed, but we had some pumps in between, right? We went from like the bottom of 80 to 360. Whereas we went from the bottom of 1700 back to an all-time high of 4900, right? So this whole kind of pattern has just reminded me of 2019. And, I just from a chart perspective, but also from a sentiment perspective where, 2018, I believe sentiment was like very different to 2019, where no one knew where the bottom was. And then 2019, everyone accepted it. They're just like, you know what, this is it. Like, let's keep building, whatever. And I think that's what happened over the last year. Or maybe the last 6 months, people are like, okay, well, this is what it is. It's going to crab for a while. Let's just keep building. And I think as we kind of like continue on, and as more people become quote unquote OGs, and more people have been around for multiple cycles, we change the cycles through sheer will, of being like, no, we refused for it to be the same this time because we have all this stuff happening. And I really do think that 1559, is the reason why ETH pumped like last time. And the merge now is going to be another reason why it's going up. Because as I said, like, these are not just fundamentals. They're fundamentals that directly drive value to ETH, right? That you can map it 1-to-1. There's no need to speculate. You can say, okay, well, there's going to be this much ETH being burned, right? And that's going to put deflationary pressure on ETH. It will logically be good for the ETH price. And then now you have like the merge coming, which not only is the issuance reduction incredibly bullish for the merge, that 80 to 90%, but also the narrative around Ethereum no longer being proof of work. I think people really do underestimate how big of a positive driving force that is for Ethereum. The fact that we can basically say, well, no, we're not proof of work anymore. We're proof of stake. And all the, the people that are basically, fighting the energy use, well, maybe not all of them, but like a nice chunk of them, especially the bigger money, are going to be like, oh, it's safe to invest in this thing now because it's no longer proof of work. And I think Bitcoin still being proof of work actually works in Ethereum's favor, because then Bitcoin gets all the headwinds and takes all the flack, and Ethereum, rides off into the sunset quite nicely there.
Yeah, I hate to see it, because of all things that like frustrate me about Bitcoiners, it's not necessarily the whole proof of work environment thing, but also at the same time, like, you guys love proof of work. So like, how much do you really love proof of work? Because now you're gonna have to go to bat for it. So like, I'm very glad we don't have to fight that fight.
This is their final frontier, really. I mean, if they're going to have to resist the onslaught of all these nation states. They're going to have to resist like private money too. I mean, speaking of this, the other day, one of the Ripple co-founders have spun up an initiative and funded it to change Bitcoin to proof of stake, right?
When I saw that website, I was like, wow, this looks like somebody from the Ethereum camp is spinning up an attack on Bitcoin. And then when I learned that it was the Ripple people, I was like, only they could have done that. Only they could have put out that speech into words, and they killed it. It looks like everyone who doesn't care about crypto would look at that website. Anyone with a neutral opinion about crypto would look at that website and be like, oh, Bitcoin's bad.
Yeah, exactly. I think that's the goal. Like, as much as we, I mean, we're not trying to endorse Ripple here or anything. We hate Ripple. I mean, I think Ripple's a scam, to be honest.
Ripple's a scam. Fuck those guys.
Yeah, sorry. But as you said, to the neutral crypto observer that has no idea about the weeds of crypto, Ripple to them is not a scam. Ripple is a legitimate thing to a lot of people, especially, as I said, outside of crypto. And they're going to look at this and they're going to be like, oh, well, if it's just a simple code change, why doesn't Bitcoin just change it? Right?
Just change the code. Like what? Like what? We have something better. Why don't we change Bitcoin?
But then it's going to be even worse, because Ethereum will do it, and people will think that Ethereum just changed the code, right? Like, they won't know that it was like many years worth of work to get here. They're going to look at that and be like, well, if Ethereum can do it, why can't Bitcoin do it?
Who are these like libertarian extremists that love to destroy the planet? Like, who are these people? Let's outlaw all of them.
Exactly. So that is going to play a big favor for Ethereum. It's going to be a massive headwind for Bitcoin. I've been saying this for a while now, right?
It's not the way that I want to win, Like I want
No.
Ethereum to win because it's fundamentally better than Bitcoin, and I don't want to win this way, but it's going to win. Yeah, it's going to be a big play in this. Yeah.
Yeah, exactly. And the funny thing is, it doesn't matter if all the pro proof of work arguments are correct. In that proof of work, saves trapped energy and it
doesn't matter.
Encourages renewable. None of that matters. All that matters is the narrative, and the narrative is really bad, right? And we've seen it, like as we were talking about earlier, people. They're bombarded with information, and they'll just like a lot of the time believe the first thing that they see from someone that they consider to be trusted or legitimate, which a lot of people put trust in the wrong people. And the proof of work stuff is just such an easy thing to FUD.
It's so
you can
easy.
literally just say
so
Bitcoin uses the amount of energy as this country does, per transaction. It doesn't even matter if it's not right. It doesn't matter at all. It's the fact that people believe it, and the fact that it does use a lot of energy. That part is right. So
yeah,
it's
but
crazy,
also like people are happy to like drum up fake vitriol against some subject if it gives them political capital and attention. Like people will spin up brands around political forces that they don't care about. People do that all the time. Like there is an insane clamor for just like, cancel culture has energy, and sometimes people just like love canceling stuff. And if they are successful at it, they become known as the person that canceled the thing. And so like people don't even have to hate Bitcoin, but it's still going to it's going to be cool to hate on proof of work. Hating on proof of work is going to become a huge virtue signal of the next decade. And it's just going to be because this one main cryptocurrency and this Satoshi guy just refused to change the code. Like the audacity of not changing to proof of stake.
The funny thing is there are so many people who do this, and I think one of the masters of it is Peter Schiff. He will basically put out tweets all the time, like anti-Bitcoin tweets, and the Bitcoiners will engage with him every single time. He will get so much free marketing from them. They have lots of followers. They basically bring all these people to him. And even if he only captures 1% of those people to buy his stuff, whether it's, books that he writes or articles that he does or whatever, he's still made more money than he would have otherwise, right? And it doesn't matter if what he says is true or not, because a lot of the time it's not. A lot of the time it's just complete bullshit. It doesn't matter at all. What matters is that he's getting what he wants out of it, which is free attention, free marketing. And it's just hilarious how, especially Bitcoiners who say, don't believe this, don't believe that, don't give attention to these people. And they give attention to Peter Schiff, the person who's been trolling them for years.
Right. It's ridiculous. It's like Peter Schiff's biggest following are Bitcoiners. Like he doesn't have a gold following. There is no gold community.
Not on Twitter. Like there's no people gold. There's hardly any gold people on Twitter, right? They're all like boomers who love gold. They're not on Twitter, but he gets the attention, and then he gets like speaking spots. He gets kind of like
he's just relevant. He's just relevant all the time because he's always on Twitter.
Exactly. So, and then he's actually played it even better where his son is pro Bitcoin. Yeah. So he gets to play both sides of the of it. And it's just, dude, it's so funny to me that the fact that people like fall for this every single time. And it goes back to what we were saying earlier about people just inherently trusting of things and inherently can be baited into things. Like I could put out a tweet right now saying something about Bitcoin, like Bitcoin's going to remove its hard cap, and I'd bait so many people into it, even though it's an obvious troll or me obviously trying to shitpost. So many people will be like, you don't understand Bitcoin, you're a pleb. And it's like, thanks, man. Like, I get it. Like, thanks for the attention,
Dude, there was a time where, like, in the depths of the first bear market, 2018, our first bear market, 2018, 2019, where I was like, man, the Bitcoiners are so strong and so unified, and their message is so coherent. And like our message is just so scattered, and they just like control the narrative, and they are going to cut it. Sometimes I felt like they are just going to eat nation states alive. They're like, Bitcoin is just going to eat the entire government. And like now on this side of things, like the whole unicorn and rainbow strategy totally won out. And like the whole like Spartan, like, ooh, of Bitcoiners just is so cringe now. And like and this was the thing that I was saying during the 2018 to like 2020 bear market, is that the Bitcoiners were like, we have 100 Bitcoiners for every one Ethereum community. There is no Ethereum community. How do you expect to ever catch up to us? And what I said was that the percentage of like Bitcoin gold bug equivalent libertarians that are all about crypto that Bitcoiners have found in the world, they've already found most of them. Like there's not that many left versus like Ethereum, which has so much different like surface area for cultural onboarding. There is no limit as to like the social reach of Ethereum because it's so agnostic. It's just supposed to enable anything to happen rather than Bitcoin, which is just supposed to enable one thing to happen, which is like Bitcoin.
Yeah. And I think the perfect example of that is NFTs. Most of the people that came into NFTs in the last year are new people, net new people. They're not people that were here already. And that's the thing. Ethereum has the TAM of the entire planet. And I believe this since, probably some of the first days I was into Ethereum, because I always viewed Ethereum as like, not exactly like, but like as like the internet, where everyone will have a use out of it, and you'll be able to build apps for everyone. Like, I don't use everything on the internet, right? Like, I mean, as an obvious example, I don't use dating apps because I have a fiance, right? But other people use dating apps. Like, just like I don't really play with NFTs, but other people do, right? But I play with DeFi and other stuff on Ethereum. So,
and we've seen Ethereum grow large to the point where diverse communities are all in the same spot, and those diverse communities butt heads. Like the NFT and the DeFi people have butt heads, right? Like there was the whole like cancel month for a while, and like the Ethereum community butted heads about that. And so like we're putting a lot of communities into the same like tight room, but as more communities come in, the room also gets bigger. And it's good to have butting heads of communities in the same container, rather than just having like the one Bitcoin container saying the only way that you come into this container is that you be a Bitcoin. Ethereum has containers for everyone, and then puts them into the same room, which is like what society is.
Yeah. And I mean, it really is like a clash of cultures for sure. I mean, even within DeFi, you have clashing of cultures. You have a lot of people in DeFi who like these, move fast and break things protocols, like the Frog Nation and stuff like that, which, you're obviously acquainted with.
Well aware of, multiple times.
Yeah. And then you have like the slow methodical approach, which is like the makers of the world and the Uniswaps of the world, right? So there's butting heads, but in community as well. But that's just naturally kind of like what happens, right? And I think it's good that it happens on like the digital sphere, not the physical sphere, because in real life, like it's very different. Like, I mean, you can go to a conference and there can be people there that you disagree with completely online, but you're still friendly to each other. You can disagree in real life and things like that. But I think the fact that the heated arguments and the quote unquote violence stays digital is actually a net positive, because it means there's less, there's way less of that physical aspect of it, which is actually, I think an advantage. Even though it's really shitty and it's toxic, it's still a positive over what it could have been. Like, because traditionally, if humans are fighting with each other, they were physically fighting with each other over their, different ideals. Now it's fighting with words instead, right?
Totally. And it's on a related but different track of thought, is like one of the similar things I've thought about in that same like area is that like the metaverse, the digital world, will reduce like human physical consumption. Like we will like literally consume less physical things and actually perhaps output less carbon, because they have things to do in the digital world. Like, you just need one VR headset, and then boom, you have this infinite array of digital worlds to like do your basic human consumer like demands, right? I don't know if we have to go there, but let's actually do this whole thing. Guys, Anthony and I do this every now and then. We used to do it once a week, but now we're doing it like once every couple months or so. Semi-regular, Bankless Daily Gwei live stream. So we're so happy to have all you watchers. If you guys don't know Anthony Sassano, you're absolutely insane. He does a daily YouTube video and a daily newsletter. I just posted his YouTube video in the YouTube comments. It's called the Daily Gwei, and it's where you get the daily updates that happen every 24 hours in Ethereum, because something is always happening in Ethereum, and Anthony covers it every single day on his channel at the Daily Gwei, which I just posted. So go give him a subscribe. Anthony, what should we talk about next?
I mean, geez, like we spoke about the merge is obviously the biggest thing happening right now. We spoke about like the energy usage and things like that. I think one other thing that I've been noticing lately, I always kind of like get scared about talking about like this, because we've said it so many times, but like a DeFi renaissance because of layer twos, like specifically because of layer twos. Now, I don't know if people have been paying attention lately, but the synthetics ecosystem on Optimism is actually doing really well. Like, it's actually growing. Like, and I think synthetics was one of the protocols that suffered most from being on layer one due to the scalability issues, especially with their SNX staking, where it would cost like $500 to kind of like claim rewards or something, when gas fees were higher than what they are today. And the rewards were worth way less than that for most people. Then they kind of like had a bridge solution. And then they're like, screw it. We're moving everything to layer two. It's going to set us back probably a year on adoption, but who cares? We need to do this today. And now other protocols building on top of them, like Lyra Finance and Polynomial Finance as well, which has built a product on top of Lyra, which uses synthetics. It's all coming together. Like the original vision of synthetics that Kane had and his team had is actually coming together finally because of that. And it's not just synthetics either. It's also other protocols like AAVE who have launched V3 across a bunch of different networks, and their token prices are actually reflecting this. Both SNX and AAVE are up in the last week by about 50%, right? And that's actually a pretty big, that's a pretty big move for DeFi tokens. Yeah. I know they're down a lot already, but the thing is that I feel like there's actually been a bit of a momentum shift in DeFi because of that, right? And the price will always kind of cause these sentiment shifts as well, but I think it's actually justified for both synthetics and AAVE, given the fact that they're actually growing again. Like AAVE being on other networks, being on Optimism, ARBITRUM, and things like that is awesome. Synthetics being able to scale is awesome. And yeah, man, I'm just feeling it. I'm feeling a DeFi renaissance right now. That's for sure.
Yeah, and Maker is also doing the whole cross-chain thing, and they've gone, even MakerDAO is on Avalanche. Like, I never thought I'd see the day where MakerDAO would be on alternative layer 1, but even them are doing the whole cross-chain thing. And so really it seems to be like all these DeFi apps are spreading their roots into other chains and trying to spin up their products and services.
It's basically AVM chains because they're easy to deploy to, right? Like AVM chains are just like dead simple for existing teams that are on Ethereum to deploy to. And that's why you see like ARBITRUM went live on layer 2s, but also the alt L1s that have AVM chains. They don't go live on Solana because Solana doesn't have that, right? Or Cosmos, for example. But I think it makes sense, but also it's kind of like a business decision where it's like, or a defensive business decision where like, if we don't do this, we'll just be forked and someone else will take this market share. But I don't expect the long-term thing to be like 8 EVM chains being like active, right? I don't see how that becomes a thing because we don't have 8 app stores. Like it's just too much for developers. It's too much overhead, right? And users aren't going to be split between 8 different networks. You know, I always think about that and think about the abstraction and how that can happen as well. It's just crazy, man. But yeah, sorry. The DeFi stuff has just caught my eye lately again. That's for sure.
Yeah. And I have thought about the same thought over and over and over again, which is like the DeFi tokens are going to be like institution friendly tokens, especially MakerDAO. I've always thought about this about MakerDAO. MakerDAO is going to be super institution friendly. There's so many metrics to reason about. The fundamentals are so strong, and like it's like the same trap I fall into over and over and over again. We're like, dude, like at some point the DeFi tokens are going to get like sucked up by the institutions, and like, am I ready to get hurt again, Anthony? Am I ready to do this for like the 50th time?
We've said this so many times, but I think before people were saying it and there wasn't actually fundamental traction to back it up. There was just like, oh, you know, these DeFi tokens are down so much. How much more can they go down? They're going to have to bounce. But I think this time there's actually fundamentals to back it up. As I said, synthetics is actually growing and growing really nicely. AAVE is growing again because it's on different networks, not just on Ethereum L1 and some other kind of like L1s. It's actually on the L2s now. And the narrative is becoming much more positive because their tokens are pricing up. And I think, as you said, we probably have more institutions coming into the space than we traditionally did have. So I don't think it's going to apply to every token. There are a lot of tokens out there that are kind of trash and don't actually capture any value, and no one knows when they're going to capture value, and they don't have good memes behind them either. Like, I actually view tokens as trading on memes and trading on attention at the end of the day. And I think that DeFi tokens have kind of like taken a back seat to things like NFTs for a while. But I think NFTs, they're still big, but I feel like, I don't know, I feel like the NFTs might be done for a little bit here, especially as ETH runs, because no one wants to part with their ETH for NFTs when ETH's running. Like, none of the big money is going to be like, I'm going to go ape some NFTs with my ETH, and then, you know, I'm going to be down massively on my ETH because of the fact that the ETH is just going to moon. So, and I feel like DeFi tends to follow ETH as well. Not all of it. Like, there's so many DeFi tokens now, dude. It's kind of like hard to know which ones to buy. But I think that the ones that actually have traction, the ones that are still around after so long, like Synthetics is an old project now, and same with AAVE. Those might be good things to buy. I don't hold any right now currently because I'm just all ETH because of the fact that, like, I believe the merge trade is going to be biblical. But there are opportunities to be made for people who maybe want to play short to medium term, kind of like speculative stuff there. But that's just not my game at the end of the day as well.
There used to be a DeFi section on CoinGecko, but I guess not. The thing is, like, from what I've noticed, a lot of the top DeFi tokens are the same top DeFi tokens that there always were. Like Aave,
Mm,
Maker,
mm.
Synthetics are like the big ones. Yearn is the most recent one to break into like the top DeFi tokens, but it's still really the OGs. So like if we take history
Yeah,
as
but
yeah, go for it.
Make. I was just gonna say, Maker is MKR. Everyone who buys that just gets burnt, man. Like it's
Yeah,
so
this is true.
bad.
How high? Where is it on the top charts?
67.
60. Oh yeah, that's not that high. Oh god,
Yeah,
it used to be
it's.
top
I mean,
like
not the.
top 20 or top 30 or something.
And this is what I mean. Like things can have traction, but the token doesn't necessarily have to reflect it for many different reasons. So yeah, I mean, I wouldn't be buying something and being like, oh, because synthetics and ARBITRUM went up, this is going to go up. Maybe it does in a bull market where there's a relative trade going on, but it's hard, man.
I
Like
think
it's very
MKR
hard
is harder to time than the ETH BTC ratio.
Oh yeah, it's very hard. I think MKR definitely is an asset that it doesn't get any love, even though Maker's such a great project. And anytime it pumps, it's like during the tail end of a bull market, and and you don't want to be buying into that. So
okay, so the DeFi summer got kicked off because of the invention and basically of yield farming. Like, do you think that DeFi can bring itself back without some sort of just like fundamental catalyst? Like, oh, it'll just like it's the DeFi trade.
What? I think the fundamental catalyst is the layer twos, the scalability, the ability to onboard more users than we traditionally have. Because, like, look, man, I mean, the gas is already back to 50 Gwei. It was 20 Gwei 2 weeks ago.
Right.
Like, layer twos are not a thing that are kind of like a pipe dream anymore. They're not a thing that we need in the future. They're a thing that we need now. And we have bridges into them. People are using them more and more. There are native projects being spun up on there.
Dude, the bridging experience is so good. I love bridging. Bridging's fun.
Yeah.
Like it's so easy.
Yeah. And then the amazing thing is that when you bridge into something like Arbitrum or Optimism, you go from like the relatively slow and expensive Ethereum layer 1 instantly to this layer 2 that gives you the same experience as Ethereum layer 1 gives you, but at the fraction of the cost and at like basically instant transactions, confirmation, not finalization, obviously, but confirmation.
Dude, my transactions are done by the time I move on to the next tab. Like if I go to the other tab, like the other tab's ready for me. Yeah,
exactly. So I think there's more, and L2s have just continued growing even during kind of like the down market, not even just in TVL, but in transactions and stuff like that per day. And they haven't got tokens either, right? Optimism and Arbitrum don't have tokens yet. There's no token incentives from them, and they still have managed to attract a decent amount of activity. So, when they do tokens, like I think that'll be a big catalyst too, right? For everything, especially if they do it right. So I just think layer twos in general are they talked about a lot, but I don't think people realize like how powerful they're going to be for adoption in terms of like getting people to use Ethereum again. Because a lot of people obviously overflowed to these EVM chains like BSC. The Polygon POS chain was a nice little buffer there as well for people, and it's still a good ecosystem. But then, the AVAX C chain, Phantom, I think there was overflow, but there was also a lot of people chasing the money too. I don't know if I've said this on our live streams before, but I said it on the Refuel where I basically said, I truly do believe that even if Ethereum had low fees, the L1 trade still would have worked because of the incentives that they used, right? The incentives are what attracted most of the capital to their ecosystems. It wasn't the cheap fees. If you see the amount of money that goes, there's a lot of whales that actually went there. The whales don't give a shit about the fees. What the whales want to do is they want to farm and dump, right? And that's exactly what happened on a lot of these things. But in saying that, obviously, like expensive fees are pricing out a lot of users as well, and a lot of users got value out of the cheaper chains. But that's a commodity. Like cheap block space is going to be a commodity. It's not a moat. Like everyone can do cheap block space.
Anyone can make block space. Block space is easy.
Yeah, exactly. Mm-hmm. But it's the one thing that I believe has product market fit in crypto, long-term product market. Like if you're bullish on crypto, you bet on block space because it doesn't matter what projects succeed. They all use the same block space or, in the same ecosystem. Like all the projects on Ethereum are using the Ethereum block space, right? Even if they're on layer twos. And then you can bet on layer 2 block space and things like that. So that's my thesis, like a big thesis for me as well, is betting on block space.
Okay, let me run this trade idea by you because everyone wants exposure to layer 2s. Like it's the hot new block space of the digital age. And so like on the airdrops, like what about buying the native tokens for layer 2s on the news of the airdrop, right? We know the crypto industry runs on attention, right? So like, yeah, thank you for fixing that. That was bugging me.
Yeah, I don't know why my camera's blurring out. Sorry.
Yeah, it's focused on the background.
Go.
There you go.
Yeah,
and so like, so like on Optimism, right? Like the Lyra token, Lyra or Lira? Lyra?
I think it's Lyra. Yeah.
Lyra, and then is there another native optimism token? I can't remember. But then like the magic token.
There's a bunch of them on Optimism right now. I think. Yeah, I don't know all of them, but yeah.
And then like magic, I think is associated with Arbitrum. And so like, what about buying these tokens, the tokens that are just branded to be of the particular layer 2s, to like speculate on the layer 2 drop, right? Like I feel like that's a very, very left brain play that works out.
Yeah. I mean, maybe, right? They have a, well, Jesus, my dog's just gone nuts because there's someone at the front door, I think. Oh man, no, all good. Yeah, my camera's up again. Sorry, it's going to be blur city, but no, I mean, I think it makes sense. Sorry about my dog, by the way, if you can hear him. I think it makes sense. But the thing is, like, stuff like Magic has already gone up a lot because their own ecosystem has done really well, right? Outside of being on Arbitrum or otherwise, their ecosystem has done really well. But there are proxy trades to be made, of course, I think. And the funny thing is that the tokens that get dropped as these L2s, they're going to have massive market caps, dude. Like, it's actually going to be crazy because everyone's going to want to buy these tokens like from the get-go, especially like even if they get airdropped them, because they're so hyped up. They're like, oh my god, layer 2s, they're going to do the relative layer 1 trade. They're going to be like, if this layer 1's worth 100 billion, why can't this layer 2 be worth that?
Wasn't Optimism valued in their most recent raise at like $1.5 billion?
Well, yeah, I think it was 1.6 billion.
1.6?
Yeah. And Arbitrum was 1 billion. ZK Sync was 1 billion, I believe. Starkway's doing a $6 billion. Apparently, I know. So you know what I'm saying? Like
that puts Optimism and Arbitrum at like 80th on the coin market cap at the most recent raises.
Exactly. So, geez, my dog. Jeez. Yeah. So I think that people are just going to end up doing that in a really big way. And the values are going to go like, they're going to skyrocket. And I think it's going to be kind of, depending on how the token distributions are done, it might be bad because there might only be like 10% of the tokens circulating. And then like, it's got like a $20 billion fully diluted market cap and everyone's like, I'm going to buy it. And it's so bullish. And then it just like it's just down only from there, which we've seen play out a lot of times, right? With a lot of different tokens.
Granted, we haven't seen layer 2 tokens yet, so that's a little bit different. And
I mean, we've seen in a limited fashion with Matic, but Matic obviously went up a lot in value, but that's because it started out at a very low market cap. Like, I think Matic before it went up a lot was at like 2 cents. I'm just looking at its chart right now. Its market cap would have been tiny at that point. I think its market cap when it was at like,
no way.
I think, Jan 2021. Its market cap was 165 million.
Oh my God.
Right? There's no way in hell any of the layer 2 tokens are going to be worth that much from the get-go. They're going to be worth so much more than that, right? So you can't really compare that, even though I consider Matic to be an L2 token because of the Polygon ecosystem. But there's Metis as well and things like that. Like Metis actually started out quite low, I believe. I'm just looking.
Okay, so here's my take for a future version of the world is that like Arbitrum and Optimism, they drop their tokens coming, I don't know, at like a $4 billion market cap seems rational and reasonable and maybe a little bit low.
That's a bit low, I think.
And again, the whole point about a layer 2 is that it's extremely easy to spin up a layer 2 versus how easy it is to spin up an entire layer 1. Because at layer 1, you have to worry about token issuance, distribution, security. There's a lot of just baggage that comes with layer 1. So like, why deal with that? Just like make a layer 2 on Ethereum. And look, Arbitrum and Optimism just airdropped $5 bajillion. And so like, clearly you should go do that. Like the new, we were talking about this. I was talking about this with Ryan on our debrief episode post Olaf Carlson who we had, the Polychain CEO, and we were talking about his thesis, and he basically said, like, look at the name of Polychain, like the Polychain thesis. Like, it's going to be many, many, many chains. But you know who really likes many, many, many chains to exist? VCs. VCs love many, many, many chains to exist. That is entirely in their interests. But as soon as Arbitrum and Optimism like drop their tokens and prove like, boom, you can just like splash a $5 billion network into this existence, like the new like layer 2s are about to be the new layer 1s. And this is a thesis that we talked about like at least 9 months ago. I mean, the foundation for that thesis is all still there. Like, it's going to be way easier to make a layer 2 than it is going to be a layer 1. And boom, you can just mint $5 billion. VCs love minting $5 billion. They're going to do this all over the place.
Yeah, I mean, I've had the same thesis for a while as well, and we've already seen forks of optimism. You know, Boba and Metis, right, that have managed to gain gain a community because of their token and gain traction. So yeah, it's definitely much easier to spin up a layer two. We're gonna and yeah, as soon as the tokens start dropping in a big way, people are gonna go crazy with it. They're gonna be like, yeah, free money everywhere, right? And you know, the funny thing is that the L1 trade has actually been quite profitable, especially for VCs, like quite probably extremely profitable. I think the L2 trade is probably going to do that as well. And you know, disclosure, I mean, we're both kind of like investors in these L2s and stuff like that. So obviously we're talking our book here, but I mean, we invested in them because we
because of
you know,
this
believe
thesis.
in
Yeah,
because of this thesis. So I hope that I don't have it, like, I don't talk to the teams about their tokens or what they're going to do. Like, I don't even know which ones are going to do tokens, when they're going to do them, right? I just have the assumption that they're all going to do tokens. Like, I have the assumption about every project, but I hope that these teams don't destroy their token by like airdropping only 2% of it, and then the rest of it is just like coming out over time, and it just becomes like a down only thing,
a farm and dump
from
thing.
there.
Yeah.
I hope that doesn't, but it's a rock and a hard place because everyone's just going to hype it up regardless of what they do, right? Regardless of how they construct these tokens, people are going to bid this thing up to insane valuations, and then you're going to have like all the growth from the next, you know, few years brought forward, right, to that point in time, and then you're going to have to price that in over time. And that's happened with everything. That happened with ETH in 2017. ETH got priced as if it had already achieved all of its goals, right? And then 2018 hit, and everyone's like, oh well, proof of stake isn't actually coming. The ICO mania was like a mania. It's over now. And we have all this supply that's coming onto the market because of ICO treasuries, and ETH went down 94% in like 11, 12 months. So I think when you look at it like that, you have to basically think and look at these valuations and be like, okay, has years of growth already been priced in at this point? And what's the, you know, what's it going to be the next few years? And for a lot of tokens, it's down only, unfortunately.
Okay, so I know you're, if anyone's an ETH maxi, your name definitely shows up in the top 5. And so when the layer 2 tokens come out, which are tokens, with layer 2 roll up tokens, which I will differentiate in this particular instance, Matic, away from this group, where like the general thesis on the layer 2 tokens is like you would evaluate them on their MEV, right? Like their ability to sequence transactions, and that's going to be the fees for the network. And so you take those fees and then you subtract the fees that it costs to make transactions on the Ethereum L1, and that's your profit for the layer 2 token. That's generally the thesis behind these things. It's very, very similar to the ETH valuation thesis, where like how much yield can you get from EIP 1559? It's the same question for the layer 2 tokens, is how much MEV can you get on the layer 2s? So you being the ETH maxi that you are, do you see yourself trading away your layer 2 tokens eventually for ETH without me talking about the specific valuation or numbers? So as a broad question, do you see yourself rather owning ETH or the layer 2 tokens?
I have absolutely no idea, dude. It's so hard to, you know, because layer 2s are good for ETH, obviously, right? The more layer 2 growth we have, the more block space layer 2s take up, and they're always going to be the largest bidders of block space because they don't care if they're growing. You know, that doesn't matter what the fees are; they're going to pay them. I actually don't know. It's really hard for me to know, and honestly, I've thought about it, but I've not come to a conclusion. I think that. Well, I mean, this is the funny thing, like, to be totally transparent, like but given that we've been in the private rounds and things like that, like, and then we have vesting and stuff, it's even harder because, you know, obviously being in a private round, if I, you know, I got into the ARBITRUM earlier round than the one that they did, the Series A, and that was valued at a lot less than $1 billion. And then what happens if ARBITRUM goes to like 10 or 20 billion, right? Like, and then I have vesting on top of that. And then, you know, during that vesting period, maybe the token price comes down. There's a million factors to consider here, and I don't know what I would do in that scenario. Obviously, I want to keep stacking ETH, but I like, you know, it depends on how the L2 tokens go, because not all of them are going to be created equal. Not all of the L2s are going to win. There are going to be some that don't gain any market share, right, or gain little market share compared to their competitors. So yeah, I don't have an answer to that. I think I have to kind of separate it maybe and be like, okay, here's my L2 pile, here's my ETH pile, and let's just keep it separate. But I do tend to just compare everything to ETH in the end, right? I can't. It's hard to keep it separate.
You know what I think is missing, except for the Looks token, which did this and still does this, but it's a little bit unsustainable because the ETH dividends coming from Looks is coming out of token inflation, basically. But with layer 2s, wouldn't it be cool, like I just explained, MEV, yield, you get the fees from the layer 2s. If we just treated that like a business and it just spit out ETH dividends into the token holders, how cool would that be? I feel like that's not that big of an ask. Can we please have that?
No, it's not. Especially because ETH is going to be paid in the fees anyway, right? Even in the background, because it needs to be paid to layer 1. So yeah, you could have a token that is the MEV capture token, but you get paid ETH rewards, like what LooksRare is doing. And it seems to have worked for them. Like even though the Looks price, I mean that's another thing. The Looks price.
Don't look at the Looks price.
I mean, I mean, it's actually not too bad right now, but it did go nuts, and then it came down a lot, and now it's kind of going back up. But I think that can work really well.
Oh wow, yeah, it is doing well. Look at that.
Yeah. I mean, it's kind of hard to tell because like we're in kind of like a bullish momentum right now, and people are going crazy over things. But yeah, I do think that there is an argument to be made that you could pay out ETH instead of the native token rewards, and people would want ETH instead. To be honest, I would probably want ETH as a reward token other than something else. So yeah, I get that thesis. I can gel with that.
All right, anything else we talk about before we wrap it up?
No, I think that's it because I got to go now. I have another meeting soon. I need to get to, but yeah, this has been fun. I'm glad that we got to do this again.
Let me get your. Do I still have it? Yes, I do. All right, guys. I just linked Anthony's Daily Gwei YouTube channel in the YouTube chat once again, so you can go follow him there. He's got some great takes, covers the news, goes on 30-minute rants every single day. He's the first voice I listen to when I wake up in the morning. Anthony, thanks so much for coming on and live streaming with me, brother.
Awesome. Yeah, no, thanks for having me again, man. And we'll do this again, hopefully not in 2 months.
Oh, I forgot. And listeners, I have a awesome video for you to listen to. Here it goes. Oh, wait. Where did I put it? Here it is. All right. Bam.